Welcome everyone to our weekly webinar. I'm Diane McKeever, the chairman of the Education Committee for the Minnesota chapter of SCORE. And today we have an outstanding speaker in Michael Travis, and he is going to be talking about budgeting, a tool for planning and managing a business. Yes, indeed, budgeting is very important. Well, before we get started, I want to tell you just a little bit about SCORE. I don't want to take up a lot of your time, but SCORE is a nationwide organization that's made up of volunteers. It's completely volunteer network. We offer free, always free. People keep asking me, when are you going to start charging for this? We will never charge for this. Free confidential business mentoring. Our chapter, which, as I mentioned, was the Minnesota chapter, serves Manatee and Sarasota counties. Although I don't know about Michael, but I have clients who are in Washington, D.C. and California. So we service clients around the country. We have nearly 90 volunteer mentors waiting to help you. And our chapter was recently recognized as a district chapter of the year. Before we get started, though, I want to talk about when you might think about contacting SCORE relative to getting a mentor. Well, any place in your business development, we can help you. Pre-startup. You just had an idea last night and you kicked it around a little and want to kick it around a little bit more. We like kicking things around. So come apply for a mentor and we'll help you figure out whether it's a viable idea or you've actually started a business and now you realize that, oh, maybe you should have thought about a couple more things. We can help you with that. Or you want to grow your business, or lastly, you want to sell or close your business, or conversely, you want to buy a business. We can help you with that so that you don't overpay for it. The last thing I want to talk about is I want to thank our, I want to suggest, I've been talking about getting a mentor. Well, where do you get one? Well, you can go to score.org/Minnesota and you see the big old button that says request a mentor. That's all you have to do. Fill in a little information about yourself and what you're looking for, where you are in the business process, and we will assign you a mentor. And now, lastly, I'd like to thank our sponsors. You'll notice many of them are financial institutions. And if you go in with a SCORE mentor, you're going to find that they listen to you a lot more than they would if you came in with a whole bunch of papers and let them figure out whether or not you are credit worthy. So why don't you work with a SCORE mentor before you head for these? We'd like to also thank our community partners. So without further ado, I am going to turn this over to Michael, who is going to help you with your business budgeting. Take it away, Michael.
Well, thank you for that great introduction. Sorry, I was driving pretty badly for you on your slides there, but it'll be okay. So this is actually a three-part series. A week ago, we had a great session by Bill, who presented on cash management and cash issues and cash forecasting. Today, we're looking at another great topic for entrepreneurs in the financial series, budgeting and then how that ties in with your income statements. And then a week from today, another speaker will turn and cover the topic of balance sheets. So if you haven't signed up for that, be sure to consider that for next week. So we'll get started. What I'm going to do today is kind of divide the time into three parts. I'm kind of give you an overview of budget, what is a budget and why it's important to a business. And then we'll spend time looking at just some of the techniques and processes and ways you can go about putting your budget together, building your budget. And then I think a great thing about having a budget is it's a great tool when you're running the business to be able to go back and compare your actual results. So what you had thought it might be going into a year and be able then to make management decisions to corrective action as needed, et cetera. And then we'll save some time at the end for Q&A. And I think Diane, we're going to use the Q&A function. If you have a question, I think you can type a question where it says Q&A, you click on that. And I'll try to occasionally take a peek at that as we go through the session.
Perfect.
So we'll get started. So here, budgeting overview. So, a budget, it's really a spending plan based on your income and expenses. Excuse me. A plan for how much money you're going to earn and spend over a certain period of time. And, most startup businesses and smaller businesses, you're tight on cash, you need revenue in. And, having this budget in place is something that can really help you know what's coming down the road. So, and also a budget, it's a plan where the business wants to go. It's what you're going to try to execute to. But people also do forecast in these during your year. And the forecast is more of an indication at that point in time of where you think it's actually going. So a budget could be a forecast down the road from the budget could be a little bit different than what you had in the plan. And of course, that's valuable also to know what trend you're on and kind of what's happening to you. Okay, what have people said about budgeting? Way back in the late 1700s, Ben Franklin talked about planning. He said, if you fail to plan, you're planning to fail. Harvard Business School, they've written a really nice e-guide for managers of businesses, but it's about finance and accounting. And in there, they're quoted as saying one of the best or most important finance skills for managers really is to master the art of budgeting, putting together your plan. Personal financial expert Dave Ramsey, he's written a lot of books. He says a budget's telling your money where to go instead of wondering where it went. So a lot of good benefits. A couple more. If you don't have a budget, you're flying blind, and that's not good, obviously. And then lastly, budgets aren't for everyone. We had a SCORE mentor here, unidentified, that had a discussion about budgets with their spouse, and it didn't really go that well. So they didn't really have a meeting of the minds about the household budget, but hopefully you'll have better luck in your organization. Okay, so let's look really at how it helps you. It's kind of a health check on your business. When you put together a budget, you can kind of see in one place on one schedule what the prospects and the outlook is for your business. So it helps you really understand where you are in your process of building the business. If you need a loan or want to attract outside investors, one of the first things they'll ask for is what's your plan, what's your budget, what are the numbers? And usually people that are going to invest money or loan money are interested in your profitability outlook. So you'll see today, we really pattern the budget after a P&L statement or an operating statement. A budget, as you get into it, what usually happens is you have to do some prioritization of some of your things you'd like to spend money on. I know that in the many years I was in business, my appetite for doing things for the company was a little bit bigger a lot of years than my ability to finance it. So you have to kind of make some decisions and prioritize things and decide when the right time to do spending is and to invest. And so a budget helps you look at those things you want to do and when you could do them. And then finally, once you have a budget and once you start operating, trying to achieve that budget, you'll get feedback. You'll be able to compare your actual results to what you had in your plan, and that helps you then with decision making to adjust or correct your business going forward. So a lot of great things happen if you have a budget in place. We're going to shift now to building the budget for your business. Okay, tools. How do you get started? I'd say most entrepreneurs will build a basic budget in a spreadsheet using either Excel or Microsoft Sheets or another product. And, people start with a blank worksheet, but you can also download templates. Excel and Google Sheets has budget templates you can start with. And also SCORE has a huge library of financial templates that you can use and pull what you need out of there to start with to start completing or building your budget. Also, if you're already in business, I imagine some of you are already in business, some of you are have an idea or getting ready to start a business. If you already have some bookkeeping software selected, many of those products like a QuickBooks and others have a budgeting capability built into that software. So you could actually, if you've got your company already up on something, you could look to see if the budgeting capabilities in those products might meet your needs as you put your budget together. I've always liked the modeling capabilities within a spreadsheet. You know, you can run scenarios, what ifs, really easy, change numbers easily. What if my revenue is only 85% of what I think? What's my bottom line look like? You can, play with the numbers a little bit easier, I think, in a model or a spreadsheet. So if you're comfortable with spreadsheets, or if you have a accountant or advisor that can help you that's comfortable in spreadsheets, I think in a lot of ways that's the way to go. So I'm going to use this format as a base today just to talk about putting together a profit and loss budget, or a budget for your business. And where did I get this? This is a SCORE template for developing a business budget. And I'm going to give you the link so that you can go to the SCORE website and pull down this template if you're interested in this particular template. So this particular format is set up on a calendar year or a fiscal year. It's got 12 months. It's assuming you're going to budget by month. Notice there's a place at the top you can fill in, and the month and year you're going to start the budget. So that lets you adjust the spreadsheet, you put your company name in, et cetera. And if you look at, we'll go through some of these lines in more detail, but if you look at the left column here, it kind of looks like a income statement. It's got your revenue at the top. It's got cost of sales down to gross profit or margin. I'm going to talk about that in a minute. Other expenses, down to a net profit before taxes, and the capability to put taxes in here and come up with a net operating income. And obviously, if you're doing this from what you think you can accomplish, it kind of becomes your budget. That becomes your plan or your budget as you work on, investigate what you're going to need to spend, what your revenue potential is, et cetera. So let's look a little more here. So across the top, no matter if you're doing months or like last week in the cash management seminar, there was a lot of talk about budgeting by week. And I think from a cash standpoint, that makes a lot of sense, knowing your cash balances every week, especially in a newer enterprise. But if you wanted to budget by quarter or some other thing, you could fix that in these spreadsheets. But whatever you do, you're going to have, this is a traditional format where categories are down the left side of the page and the time periods run across the top, down to some totals. You could add totals by quarter, you could add totals for the year, whatever works. Also, I'm just going to kind of point out, here is the link for this particular template that came off the SCORE website. So something that, at a later date, as you're starting to get more into budgeting, if you'd like to look at this template or others that are provided by SCORE, you can go there. Okay, so I want to kind of first focus on this first section, which was kind of the revenues categories, the cost of sales, and the gross profit. And the basic formula for that is revenue less the cost of your products or services that you provide, or your cost of goods sold, equals a gross profit. And a lot of people will refer to gross profit as gross margin or profit margin from those sales. That's got some interchangeable kind of terms there. But basically in this section, you're based on, I'd say, your marketing, the customers you have, any advertising you're going to do, the number of salespeople you have trying to build business. You're going to come up with a revenue projection for your company. And it's pretty common to group that into some categories. I'll show you a sample of that in a minute, but you might have, more than one product category that you're selling. This can be pretty high level, but it gives you an opportunity to separate different parts of your business and plan that way. The cost of sales then are the direct cost of delivering that product or service. If you're manufacturing, obviously it's the cost of manufacturing. If you're buying a product that you're reselling, it's the cost you pay for those items. A lot of times you add value to a solution through labor and through maybe enhancements. That can get added into cost of sales. And then all of that comes down to a gross profit. And one thing about gross profit is investors especially, like high gross profit businesses. They see a business that's generating a healthy, or could generate a healthy gross profit, and they get more excited about that. So as you're looking at your business ideas and what you're selling and what it's costing you, you look to see what kind of gross profit am I really driving before I pay any of my administrative or back office expenses. Okay. I like to use some planning factors when putting together a budget. So, based on the industry or business you're in, you probably know that business very well. You can build up a budget or a plan by first estimating what you think you can do using some planning factors. So some examples. You're running a restaurant. Some people might think about their revenue for the restaurant in terms of the average check value. What's the average person going to spend on a meal in your restaurant? And the number of diners you might have per day. That would be a way to kind of break down your restaurant revenues into a way to kind of think about it a little bit differently. And remember also, like in certain businesses, like a restaurant, I think they do higher revenue on certain days of the week. Maybe a Monday and Tuesday slow, a weekend could be much busier. So you could even have, as you're thinking about building up your revenue model, thinking about, on a Saturday, I could do this many diners, but on a Monday, I'm going to do a lot less, maybe, whatever your situation is. And again, when you think about revenue, you're thinking about what, the people your customers you have today, or you're going to acquire, what you're going to do to attract customers to the business, to the marketing that's also in your plan, and to figure out then some reasonable projections for what revenue might be. If you're in a products business where you're selling widgets or anything, you might think about that is, how many will I sell? And what would be my average, pricing? You might sell to different customers at different prices potentially. And so you can kind of think about building up product related revenue projections that way. A service or repair business might have things like, you have technicians in the field maybe. How many technicians do I have? How many calls per day on average will they make? What's the number of averaged hours I'm going to be able to bill for each call? And again, it's a way of breaking down your revenue line into something that gives you the basis for building up that revenue budget. And so you can kind of see there, if you had 2 technicians in the field doing 4.3 calls per day, and they take some 1.7 hours that we bill out on every call, and I'm billing out my labor at $105 an hour. If I have a 20-day month, I'm going to bill $15,000 out. And so that's, again, it's a good way to kind of think about that going forward. Part of your budget process, once you've done a budget and you have these planning assumptions, part of the budget process then will be to kind of monitor, well, how's my restaurant really doing? What is my average check? How many people am I attracting? And so then you can know whether in the future you need to, adjust or, change the way you're thinking about revenue projections based on your business. Remember also, most new businesses require a ramp-up period to grow their revenue. And so, if you're an early stage business, you're probably going to start with fairly, lower, more modest revenue projections in the early months or quarters. And then as time goes on and people get to know you and you get word of mouth and you have some successes, you could hopefully would be able to build up a larger revenue volumes over time. So we've had some questions here. Should I wait on those, Ann or Diane? I haven't been looking at them.
We don't have any questions yet, so you're
Okay.
good to go.
Okay, I'm good to go. I saw something flash down there. Sorry. Okay, so back to the schedule. We talked about, the top of the sheet down to gross profit or gross margin. If you have an existing business that already has financial statements, you're probably going to budget by the way you keep books today. And so that would be the way to kind of create that category up there. If you're a newer business, you're going to be able to kind of invent that based on what you think your primary products might be or categories of revenue, et cetera. I'd say for a newer startup business, talk to an advisor or, your SCORE mentor, and they can help you figure out at what level might be good for you to budget at. So you don't have to go into this totally blind. For revenues, I'm going to the right side of the schedule now. You include your major sales categories. If you're a service company that does window washing and power washing, that might be your only two categories for revenue you're going to budget. Again, the cost of sales, also called the cost of goods sold, cost of your services if you sell services, or the direct cost to deliver that product or service to your client. And then we talked a little bit earlier about gross profits or gross margin. So that kind of handles the top of what you're going to be putting into this worksheet. And then down below the gross margin line, or the gross profit line, you've got what I would generally call general administrative expenses. This particular template in the explanation calls it operating expenses. Overhead might be another category you want to call this, but it's all the things that you're going to spend money on that are not really related to the direct cost of delivering the good or services. So this is things like your rent, maybe some sales commissions, utilities, depreciation. If you have some assets that you've purchased for the business or put assets into the business, a vehicle, machinery, the cost as you depreciate those fixed assets, you purchased them with capital that doesn't go on your income statement at that point in time, but as they depreciate, those costs flow through your income statement. So you can kind of include that based on what kind of business you have. And then in this model, which I kind of like, they put a reserve for contingencies in their budget. So it's a little cushion. Not a bad idea. There's always something, it seems like, that's unexpected that comes up in personal lives and in business. And so having some kind of a earmark or reserve for something that might happen so that you're not, totally blindsided financially by something happened that was different is not a bad idea. But this gets you all the way down to computing a net profit before taxes. You're showing the taxes that would affect your business, and then down to a net operating income, or really the profit that's going to be generated, that you're projecting to be generated out of this business. Okay, so some other advice and a disclaimer or two. Again, be sure to consult with an outside advisor, and they can help you put together the kind of framework for your particular situation. What should those categories look like? And eventually, you want that to tie in or to mimic or model what you're doing in your financial statements. So if you budget the same way you print or show your financial statements, that makes comparisons much simpler. I'm not giving any accounting advice today. I was a CPA in the old days, but there's no accounting advice being passed on here. So could talk to your advisors, but just some reminders. Revenue is usually earned or earned by the business when it's invoiced. Especially if it's a product or service. But sometimes if you have a business that delivers things through a contract, the work's gonna be done over 3 or 4 months. You can have, there are certain provisions where you can do installment billings basically to your customer. 25% will be due on this date, and that happens. And then you can recognize those parts of your revenue as you're able to bill those per the contract with the customer. And then also remember, whenever you put that revenue in the budget, you should match the cost of sales for that revenue in the same month. So that's really the way that accounting is designed to work. You're matching revenue and expenses for the same thing so that you can kind of see in one given month the expenses that were related to the revenue that you earn. Those, again, you'll get some help on this, but those are just some quick reminders. Okay, I think another lesson over time, budget numbers should reflect your financial reality. I think be realistic, maybe a little conservative on the revenue side regarding your sales projections and any required spending. And I always used to tell managers that would do budgets, kind of under promise a little bit, but over deliver for me. Don't get too crazy. Tell me what you can do, but have a aggressive plan or a good plan that's really achieving something, but then hopefully you blow by that and do even better. And that's been my budget philosophy from a management side a little bit. The budget, if you're a startup and you're not profitable yet, the budget will also help you determine when operations are going to break even. We'll see that. I'm going to show you a completed example in a minute. So you got to think about if you're in your first year of budgeting and it's showing that you're going to have 9 months of operating losses, you've got to be able to kind of fund that to your business gets to the point where you're able to have your revenues offset all your expenses, and then hopefully after that even start to generate a profit. I also think budgeting is about iterations. You do a plan. First time I usually looked at a plan I think, oh gosh, this doesn't work. Something's wrong here. My revenue's too low, my expenses too high. I can't afford all this stuff I wanted to do this year. And so you do some kind of iterations, and but that's okay. So you might take an unfavorable outcome, and then you'll have to go back and set some priorities. You might have some non-critical areas of expense that may have to be deferred or reduced until the business has some success. And it's really all about setting priorities and also understanding what you really need from a financing or a capital standpoint to get this business off the ground. I showed you a budget for your P&L or your operations. There are different kinds of budgets also. You could have a subschedule on your payroll. You could have a subschedule on capital. Here's my capital budget for the year. Those are the investments that you think the business needs to make in items that are really going to be part of the balance. They'll be added to the company and be part of the balance sheet. again, a vehicle, machinery, anything that's really a furniture, anything that's really an asset, those get capitalized and you incur those costs to your business over time. And your accountant or advisor can tell you for every class of fixed assets, how many years you can depreciate that over. Okay, so here is using that template in the template library, or in the case that you open for that particular worksheet. It also has a completed example in it. And this is Ann's Nursery. It's an example of Ann's Nursery. And you'll notice it uses that same spreadsheet format. And you can kind of see here, I think it looks like Ann's Nursery is kind of a startup. Notice how up in the revenue section that some of the web sales and the distant nursery revenue start up later in the year. So that's things they're going to have to build some momentum around to get started. You kind of see the revenues ramping up by month a little bit. I thought it was kind of interesting. Notice in December, they were rocking along with web sales for plants at 10,000, 10,000, 20,000 a month. In December, they put 5,000 in there. That might be what happens in this business during the holidays. So you have to think about seasonality, and you know, are you going to be able to? There'll be certain months of the year that you're going to have really much higher revenues, and certain months you need to plan for not having quite as much volume. But that kind of shows you in this example how this building is kind of ramping up. This business is kind of ramping up. And in the operating expense area, you can see the categories of the items that they thought were appropriate for this business. You would have, for your business, you'll have maybe other items that are the most appropriate for your business. And let's see. They had income for other expenses. I think in this example, their other expenses was interest. I cut it a little bit so it fit on a page. But I think that in the other expenses, they had some things like interest expense down there. But you can kind of see there's kind of a completed example. And that really kind of tells you a lot about, you know, how fast this business is going to ramp up. You know, $10,000 a month in January. They, you know, over the summer, they're up to 40, 45,000. You know, what they expect for their cost of goods sold to be. You know, again, I always like to divide my gross margin or my profit margin by my revenue to see what my margin percentage is. So if we look at the last, I'm not going to do the math, should have done this ahead of time. Look at December. They did $10,500 in gross margin. If you divide that by 25,000 in revenue, it's about a 40% profit margin in the month of December. And probably a little less than that for the whole year because of the ramp up. But there's a pretty good example. And again, this example here in this presentation, which you can have, will have, and it's also something that you get downloaded with this template. Okay, and then you know, you've thought about the budget, you've built the budget, and now you need to use the budget as the business is actually in operations. So I love this by Jeff Bezos from Amazon. He says, any business plan will not survive its first encounter with reality. So all of this planning we do, he's saying, all this planning we do, it's not going to be perfect, right? It's not going to be reality. Something's going to be different. There will be some things you did not think of or whatever. And so he says the reality is always different, will never be the plan. So expect that. That's okay. Do the best job you can, put your budget together, and then you're going to learn about your business and budgeting for your business as the years go by. You'll get better and better. So I think the entrepreneurs, you've got to continuously assess your assumptions and, you know, the budget that you might do the second year, I think it will be better, more accurate, more thoughtful than what you were able to do your first year, because you learned a lot about it. Once they've done the budget and you're in business operations, do take the time to compare the actual results of your business operations to your budget or plan, for the month and year to date. And if you have some key areas of concern, you can look at that and say, well, why did I miss this? Am I not driving enough revenue, or are my back office costs too high? What are the root causes of my budget variances? And you may find some of your planning assumptions weren't as valid as you hoped. There might be timing issues when things were spent, but understand it. That's the way you learn about the business. And then you become the manager. You had the financial plan, you got financial results. Then you start to manage your operation based on this good data you're going to get back. Well thought out plan, actual results, everybody trying as hard as they can, and then how's it different? What can you do? What can you do to make it a little bit better? I also like monthlies are good, and you got to do monthlies every month, and people want to see monthly results, but I also like to look at trends. And I think to look at big trends, I like to see quarterly data. I like to see how did this whole quarter compare to the next quarter and the next quarter. And I think that those are, gives you 90 days of operations in each bucket, so to speak. And I think that's useful. Okay, another thing I like to do, or a trick or a technique that's done in business, is to kind of earmark some areas as kind of holdbacks. You're going to do a budget that has some planned spending in it, but some of the categories in there you might want to be subject to a final approval, or you planned to buy a new truck in June, but you're going to wait and see when June comes around if it's the right time to buy that new truck. So it's kind of subject. You have some things that are kind of cushioned for you, or kind of subject to when you execute them. Maybe I call those holdbacks. If a manager was running an department, I might have said, hey, we're going to hold back the marketing seminar you want to do in October, because we don't have to plan it until June, and we're going to decide in June, then make a final decision if we're going to do this marketing seminar. So the items are in your budget, but they might be contingent upon how the rest of the business is doing. So you're not going to really release those funds. You're going to hold them back until the business is ready and that item becomes a priority. For instance, you got in your budget to hire a sales assistant. Well, if your sales activity haven't reached a certain level, it may not be time to hire a sales assistant yet. So, you can still, even though you got in the budget or the plan, you can still manage that and decide when you want to do stuff. Or you need a new truck. You're going to need a new truck for the business soon, but you got it planned a certain month to do that. But, that could be deferred potentially if you want to conserve capital for some other reason. So it's okay to plan something in a month. That's the ideal situation, but then you're going to manage your business, you're going to manage it, and you're going to decide when you're actually going to pull the trigger. I also like having my team's skin in the game, not just me, not just the owner, but I like to have people, stakeholders in the business also, wanting to meet and exceed our budget targets. So I like to have a culture where all the employees are striving to make the business successful. They know as much as you need to tell them about the budget, what our goals are. It's motivating if done correctly. And so I think if you can afford it, initially consider the use of some incentives or bonuses or celebrations or employee recognition for achieving certain things. And that gets them kind of vested in what, the bottom line of the plan really is. You can tie it to the whole annual plan, or I think a lot of times with some workers or employees, it's good to incent them on a more regular basis. So you could have some shorter term incentives for people that help you get to your budget. Challenge the sales department. We need 10 new customers in September. Challenge your billable resources on how many hours a month they need to bill. Production's got to meet certain quality goals, customer satisfaction. Things that help keep the team focused on what's important in the business. And then you can, in team meetings, you can also recognize people for doing things. It's good to showcase then, Sally, you really helped us do this for the business to help it grow and succeed. So that's another thought about, ways to have a lot of people embrace some of the goals and targets in your plan. Okay, what time is it? I'm not doing pretty well, I guess. So here are some possible useful links from this. There's the link to the SCORE template at the very top. There's another broader link to all of SCORE's templates for your business. There's actually it might be the next one's a webinar, but in that section, there's actually a very comprehensive planning worksheet. It has a budget, but it's also got, balance sheet and all kinds of things. There's actually some pretty interesting templates in there. I haven't used them. I haven't used those, but, there might be some other things you'll find in there. Here's a link to another webinar on financial projections for a startup that we have in our library. And then I like this little ebook. It's like 40 pages. It's free from Harvard Business School. It's called A Manager's Guide to Finance and Accounting. And so if you're feeling like all this financial stuff makes you a little uncomfortable, that particular ebook, it's 40 pages, it's a pamphlet, a heavy pamphlet that you can download. It has a lot of great information for someone that'll help you manage this side of the business, the finance and accounting and budgeting kind of side of the business. So there's some ideas. Also, Excel and Google Sheets has templates. There's all kinds of places you can go to get things where you're not starting from scratch. So hopefully some of that will be helpful to you. So just kind of to wrap up, I hope you think, and I certainly do, I think your budget's a very valuable tool. We covered, it helps you understand the business, helps you in getting loans and outside investors, it helps you to evaluate and set priorities for spending, and it helps you manage as you get data back and you can compare it to your plan. It helps you do a better job of planning down the road, but also deciding what might have to be done because you're not quite on plan. Use your management after you get the budget in place. It's all your management skills, which all of you guys are great at, I'm sure. Work with your SCORE mentor or whoever your outside advisors are. If you find this area challenging, I think this is an area that's very common, and our mentors work with clients' budgets all the time. We're glad to help you with those. So I'm going to go ahead and we're going to stay on for Q&A, but I'm going to say thank you for attending today. Appreciate you doing that. And there's my email address if there's a question that we don't get answered in the Q&A that you want to send me later. And Diane, I think with that, we'll go to Q&A. There's a reminder on the right side of this page about the follow-on part 3 of this series on the balance sheet, which is Wednesday. I know that will be great. All right.
Great. We've had a couple of questions relative to last week's webinar as well as next week. So just to clarify, in the email that you're going to be getting with a link to this webinar, you're also going to be getting a link from last week's webinar. So you'll be able to watch both of them, and another link where you can register for next week's webinar. So you'll get the whole series very easily sent to your inbox. So we only have one question. Actually, it's a good question from Anonymous. How often should you create or adjust your budget? Monthly, quarterly, annually?
I don't know. I'm probably kind of a believer in, your budget. But clearly, if you start out in a business and the budget that you build, if you know after a few months that budget's not going to happen, it's not going to work, there were not good assumptions in there, then I think you probably do re-budget for the rest of the year. I don't, the budget itself, certainly for a more mature business is not meant to be, redone all the time. It's a guide for the business. You kind of do it and put it in place. But I'd say if it gets out of whack, yes, I do. I would kind of, okay, that didn't work. I didn't know what I was doing. I didn't have the right assumptions. Here's my new reality. We're going to replan this year, get everybody back on board to what you're doing. And I think certainly you could do that. But in most cases, if your business is operating in some kind of range that's fairly close to the budget you set up, you probably shouldn't have to re-budget. You may, in your forecast, we talked about the difference between budgets and forecasts. The forecast is what you think is really going to happen now. You might, just do a forecast.
Okay, another question. I'm on a board for a nonprofit. Our executive director has yet to provide a budget over 4 years. I think she is not comfortable creating one or asking our accountant for one. Is it possible to share this webinar with her? This was wonderful, Michael, wonderful.
Oh.
And yes, this link that we send you is not just for you. Absolutely. In fact, all of our webinars are stored on our YouTube channel. That's another place that you can see recordings of our webinars. You can go to youtube.com and put in Manasota SCORE, and you'll wind up in our channel. And you can see there's well over 100, closer to 200 webinars that we have recorded. So absolutely. But Michael, what do you think more importantly about a nonprofit for 4 years doesn't have a budget?
Yeah, I'd say that's a little unusual. Maybe there's one in the back that just don't want to share or something. I don't know. I do think, obviously, for a fiduciary responsibility for a non-for-profit, you should have a plan and some expectations about, the money that's coming into your non-for-profit and what you're going to have to spend it on. So I would think, the board would want to encourage her to, get some help to get that done. Clearly, she might need some help, or maybe the accountant needs some help. I don't know. We work with non-for-profits also, and if she wants a mentor for areas like this to be more responsive to the board, that could be something that he or she could reach out to also.
To your earlier question about how often to revisit the budget, I was thinking it probably depends partly on the age of the business. I have a client who is just starting out, and of course we need to do a budget, but I think we need to revisit that at least monthly so that we can see where those projections accurate.
I do agree, and especially in a newer business, it's hard to know. It's hard to project what's going to be happening 12 months out. So, maybe that's another valid technique for a new business is do a shorter term, do your first 4 months, see how that goes, and rebudget, the next 4 months for the next year or whatever. But those are good points. It's hard to budget something when you don't have any history.
Exactly. I think it's a wish and a hope is what you're basing it on. It can also be a motivator, can't it? If our income isn't quite what we're hoping, well, we need to sell something or we need to cut out something in our expenses. So it can be a motivator, I think, in the long run. Well, I don't see any more open questions. It's because you did such a fabulous job, Michael.
Thank you.
And we hope that you will come back and give us another webinar on another day about another financial topic, because you did such a great job on this. I think, do we have a couple more slides to go through, or is that the end, Michael?
I think that's all she wrote. Yeah,
That's
it.
all she wrote. Okay. Well, go to our website, Minnesota, excuse me, the website you have on your slide is an old one. It's actually, the current one is
Oh, sorry about that.
score.org/Minnesota, score.org/Minnesota, though the one on the screen will in fact work. And apply for a mentor. If we have encouraged you that a mentor is the way to go, we can help you. We can help you in any part of your business, whether it's a nonprofit or for-profit. So we look forward to seeing you apply for a mentor and, more importantly, working with you. All right, there are no more questions, Michael. So I want to thank you so much for sharing your expertise with us. And I'd like to thank all of the people who attended. Without you, what would we be? We'd be
Yeah,
talking
thanks
to
so
one
much for the
another.
people that attended. Thank you. I enjoyed
Thank
it.
you. Thank you so much. Bye, everybody.